So welcome everyone, and very happy to have you on board for the second MBA Leadership Series linked to the Executive MBA Chief Value Officer at Audencia. My name is Delphine Gibassier. I'll put my camera on for a few seconds. I'm the Academic Director of the program. And today we have the honor to have Charlotte Gardes and Emmanuelle Cordano. They will introduce and speak about the EU Sustainable Finance Strategy and the revision of the Nfrd Directive. So I'll let them talk first, and then I'll present the MBA at the end. So Charlotte, the floor is yours.
Yes, hello everyone. So I'll stop sharing my screen so I can put on the video. I hope you see me. Hello, thank you very much, Delphine, for the invitation, and that's a pleasure to be here with you today, even though it's virtually. So I work at the French Treasury, and I'm in charge of sustainable finance and climate risk for financial institutions, and I've worked extensively on the taxonomy for sustainable economic activities, which I'm going to present really quickly afterwards. And also I've worked for over a couple of years with Patrick de Cambourg, who headed a task force on ESG reporting for companies, and who headed recently, who had been headed an European task force on that topic as well. So I'm very happy to be here with you today, especially because I have the opportunity, and I thank again Delphine for that, to actually teach in the Executive Master's Program in 2022, I believe, teach sustainable finance and regulatory aspects of sustainable finance. So very happy to be here today. Emmanuelle, maybe, I don't know if you want to present yourself. Is that how we go? Or? Yeah.
Hello everyone. Thank you very much, Delphine, for having invited me also today. I'm here today because I work for the chair, Audencia chair on the global performance and multi-capital accounting. I'm an accountant and a finance person by training, but I really believe that finance people, finance department, finance systems are very important to help companies reach their engagements in terms of environment and societal issues. So I'll be happy to try to list what is expected from the Nfrd, but for the time being, I will leave the floor to Charlotte.
Thank you. So I believe I have 15 minutes, is that right, Delphine, to present?
That's exactly right. That's right.
Okay, good. Okay. So I'm going to present to you today very briefly, but still, the EU Sustainable Finance Strategy, and I'll actually put a focus on how public policies are implemented to enhance transition-related transparency from companies. Obviously, most of what is being done in the sustainable finance area actually concerns investors, banks, insurers, but at the end of the day, this is the real economy moving forward, and companies actually having to be transparent about how they engage in the transition, how they reach their transition goals. And so this is used then by investors to be able to drive investments towards the right direction, but also to be able to accompany the transition of the companies they actually finance or invest in. So this is why the EU has put a big focus on the transition-related transparency from corporates as part of its Sustainable Finance Action Plan and as part of its renewed action plan on sustainable finance, which is going to be published in the forthcoming months. So maybe, hoping that you see my slides well. I'm sorry, I'm a bit sick, so my voice is a bit weird sometimes, but I hope that's fine for you. Maybe just to have a quick overview on the 2018 Sustainable Finance Action Plan. This is basically the action plan here in a graph. The action plan is actually tackling, if not all, but at least the majority of aspects related to how you can green the financial sector. So it relates to fiduciary duty for asset managers, to creating standards, labels for financial instruments, financial products, to including ESG, to ratings, into market research, to including ESG into benchmarks, so indexes that investors base themselves on to do what we call passive investing, all of that. But at the end of the day, for all of this to work out, you need basically two things, and it works on two legs, just as like a human being. You need to have a common language for transition and sustainability. So that's the EU taxonomy, because the lack of information on the market, and because markets are not efficient, they need information. And so to tackle these information asymmetries, you need that common language for transition and sustainability. So that's the EU taxonomy on the one hand. And on the second hand, you need the right level of transparency, the right level of information also to tackle that information asymmetry from companies, from the bottom line, from the real economy. And so two main actions are dealing with that as part of that Sustainable Finance Action Plan. And that's what I'm going to explain today. As I said, we need we need a taxonomy for sustainable economic activities. Why? You're going to tell me probably, if the transition was that crystal clear, we would not need a taxonomy. If environmental and climate policies were crystal clear, we would not need a taxonomy. And that's right. And it's because environmental policies are not that obvious, because it's not that easy to implement the transition. Even in the EU, where we have that common framework, investors do not share the same language of what is meant for the economy to attain that goal of carbon neutrality. And so this is why the EU has put forward that project of a taxonomy. Until recently, we had taxonomies. For instance, the Climate Bonds Initiative had a taxonomy, and a lot of issuers were actually basing their green bonds issuance on this type of taxonomy. But basically, these taxonomies, though they're really important, obviously, but were sort of like a list of eligible so-called green activities, and that was it. And of course, it was really important. It is really important because that drives forward what is considered to be green by investors, by issuers, in order to green the financial sector. But the EU had another idea in the back of its head, and it was like, you need to have more broadly a common language for transition and sustainability. And so that means that it's not only important to tell investors that it's great, obviously, to invest into solar panels and electric vehicles and wind turbines and all that, but you need actually to make the transition happen in every single sector of the economy. And so this is why the EU taxonomy is really original in that sense, because first of all, it's covering not only so-called green, meaning already low carbon activities, but also all other activities, including cement, including steel, including maritime transportation. Every single economic activity, which is the most emissive right now, at the exception that it's not covering coal and solid fossil fuels into electric production. But for all the rest, it's setting sustainability standards, thresholds to be met by every one of these activities. And the second aspect of originality of the EU taxonomy is that the goal, if you look at the EU taxonomy at the end of the day, is to reach that carbon neutrality objective by 2050. And so when you look at what is carbon neutrality, it's also actually walking on two legs. On the first hand, so the first leg is that you need to reduce substantially your greenhouse gas emissions because you have a carbon budget and you cannot consume it too rapidly because you have that much carbon that the humanity can actually emit until 2100. And on the second hand, and that's the second leg, you need to preserve the capacity of storage, of capture and of storage of greenhouse gases by organic carbon sinks. Because for all time, and since the humanity is on Earth, actually oceans and soils and forests, they have captured and stored greenhouse gases emitted by humans. And that capacity of capture and storage is actually being a bit challenge, let's say, because there is a lot of deforestation going on, because oceans are acidified because of global warming, because for a lot of reasons, because ecosystems are in danger and all that. And so the very originality of the taxonomy is that when you analyze an economic activity, it's always looked upon, you need that economic activity to reduce, to be able to contribute substantially to climate change mitigation by reducing substantially its greenhouse gas emissions. And so we set a greenhouse gas threshold. But you also need to look at the activity from the point of view that it does not have to harm significantly other environmental objectives. And when you look at what these other environmental objectives are, basically they represent organic carbon sinks. And so the EU taxonomy works on these two legs. So it covers mostly everything, almost everything, and it walks on these two legs. And so we need the EU taxonomy because that gives us what we can call an inventory for the future, because that gives you what is going to be the picture of our economy by 2050 if we want the EU to be carbon neutral by that time. It's a transition tool because it separates activities, whether they're already low carbon, whether they are said to be transitional, because right now they're emissive, but they need to transition. And that also is a reporting enabler, because that gives you all of these criteria that you have to, tick the box off, and companies will have to report against this criteria. That's what I'm going to present really briefly afterwards. And it's always evidence and science-based, meaning that though at the end of the day, it's the Commission adopting the taxonomy, though member states have their say, though European parliamentaries have their say, and that's why there are so many debates around the taxonomy, at the end of the day, it needs to be science-based. And so we cannot set a criteria, for instance, a greenhouse gas threshold, if the science tells you that first, it's not achievable, it's not feasible, and second, that it's not taking the economic activity, the said economic activity to carbon neutrality. So it's always science-based. And so we have an EU regulation that sets the objectives of the taxonomy, how it's set, how it has to be used by investors on the one hand, by companies on the other hand, and the actual classification, which I'm going to show you right afterwards in my slides, are set out in level 2 EU law, meaning in delegated acts. And this taxonomy is actually set up by a platform, like an independent group of experts, which is in charge of setting the criteria, always evidence-based. So at the end of the day, the taxonomy, as I said, recognizes actually the particularity of sectors where low carbon technologies are not yet commercialized. Why? Because we understand that obviously it's very important it's more than important, it's crucial, obviously, to invest into already low carbon activities. It's important to invest in wind turbines, in electric vehicles, in reforestation, in renovating buildings, in building low carbon buildings, in all of that. But there is this substantial part of the economy which is not low carbon already, obviously, and that needs to transition. And so what the taxonomy does is that what you can see on this slide is that even for so-called transitional activities, which again, right now are the most emissive activities, because the taxonomy represents, it covers, the taxonomy covers economic activities which are responsible for over 95% of greenhouse gas emissions in the EU. So for these transitional activities, what the EU taxonomy does is setting a threshold. So here you cannot say it because it is a project, but even for the cement industry, for instance, and it's the example on this slide, it's setting a threshold of how much gray cement, for instance, which volume, of greenhouse gas emissions can the activity of producing gray cement can actually reach and be under to reach carbon neutrality. So it gives you a maximum threshold to be able to reach, again, if you want to be carbon neutral. But though you can produce so-called low carbon cement, you still need to show that you're not significantly harming other environmental objectives. And so the taxonomy here on the second column gives you the criteria to be met. So not to do significant harm to other environmental objectives, most of them dealing with the preservation of the storage, capture and storage capacity of carbon, of organic carbon sinks, worldwide. So going back to that slide, you have these three sets of activities. You have activities which are already low carbon, the ones that contribute to transition because right now they're emissive and they need to contribute to transition. And you have those that enable emission reduction. So in there you have network maintenance, you have engineering, research and development and all that. But the thing is that transition is a multifaceted topic. And when public policies actually focus on disclosure, it's not only because disclosure is important for investors, because disclosure is important for the civil society, it's also because we think that by setting the right incentives in terms of disclosure, you actually set the right incentives ahead of that in terms of how the transition is actually tackled within the company. And the disclosure of that by the company is a deliverable. It's a result, obviously, but it also has to deal before that on how does the company actually tackle the transition. And so when you look at what is transition, it's not just reducing your greenhouse gas emissions and not significantly harming other environmental objectives, as the taxonomy tells you. It entails like a series of topics that need to be tackled within the company. More or less, we can say there are four levers to the transition. First of all, it's the company is actually transitioning because it's acquiring and diversifying its activity by low carbon activities and products. It's offsetting emissions by reforestation, by carbon capture storage, this sort of thing. Not just by planting trees, which is not making you be carbon neutral. Just want to raise that point. A company also is transitioning because it's closing its so-called brown assets, emissive assets. And a company is transitioning because it's decarbonizing its core activities and its hard-to-abate activities, especially in the industrial sector. We talk a lot about the energy sector, obviously, but the industrial sector is using up much of what the energy sector is producing, right? A lot of activities can be decarbonized in the steel sector, in the cement sector, in the aluminum sector, in all of these sectors, which are actually essential right now for our economy, but which are a big part of today's emissions. And so the EU taxonomy can help with that because it can help a company with knowing what to do in terms of acquisition and diversification of low carbon activities and products, and because it can help a company knowing what to reach, where to go to in terms of decarbonization of core activities and hard-to-abate activities. But the thing is that when you look at how the taxonomy is set up right now, it gives you, as far as transitional activities are concerned, so where the ones where low carbon technologies are not yet available, it's giving you the end objective to be met. I go back to my cement example. It's giving you the threshold that a ton of cement can emit in terms of greenhouse gas by 2050, but if it's not the threshold that the cement industry should be at in 2050, at least it's giving you a threshold that's getting the cement industry very close already to carbon neutrality. As I like to say, if you look at the current taxonomy project, if all of these so-called transitional activities had met these thresholds in the next 10 years, of course, we'll still have a climate issue, but it won't be as important, let's say, because these thresholds actually get most emissive activities near to carbon neutrality. So the thing is that it gives you these thresholds. So again, these criteria in terms of greenhouse gas emissions that have to be met by companies. But it's not giving you the pathway for that. And the thing is that it's really important in our view that a company, that we don't have that binary approach, because either you've met the threshold, either you have not. If you have met the threshold, then you can be invested in through a sustainable fund, and that's great. And you can, report on how you have met that. But there is a whole part of the economy which still has not met that, and it needs to transition, and you need to give the financial sectors all the right incentives to accompany the transition of these companies. And because companies rely on multi-annual transition plans, that's where reporting is important, because reporting normally is on a yearly basis, right? But the thing is that if you just stick to that yearly basis approach, you would not allow companies to show to what extent they have put on investment plans, for instance, to reach the taxonomy thresholds. Though that does not take only a year, that can take 2, 3, 4, 5, even to 10 years to actually make the whole transition happen. Again, you are an industrial company, you cannot transition to the taxonomy threshold in a year for many reasons, because technically sometimes it's not yet possible, because you are a multinational companies with hundreds of sites, because you need to invest into new technologies, because you need to decarbonize your existing technologies, and that takes resources, that takes technical resources, that takes human resources. So you need to develop this transition over time, though in a very ambitious timeline, because again, we have that carbon budget that we cannot consume too fast. And so this is why the reporting against the taxonomy is going to be much complex, let's say, than expected. Because you would expect, for instance, if I go back to this slide, you would expect that the company having to report against the taxonomy, because companies in the EU are going to have to report against the taxonomy starting 2022. They're going to have to report on the alignment of their turnover on the taxonomy and the alignment on of their capex, so their investment expenditure and their operational expenditure against the taxonomy. But again, if we want to go beyond that binary approach, we need to give companies also the pathway to attain such thresholds. Because again, if you're a cement company, obviously that less than 1% of your revenues are now aligned with the taxonomy. Why? Because the economy is not carbon neutral, obviously. So that means that obviously for a cement company, it just takes just a little bit of its revenues from already low carbon activities. But you need to increase that part of revenues which is aligned with the taxonomy. And so this is why we're developing right now in the taxonomy. We want to develop, to be more transparent, these pathways to say, okay, by that time you will need, your taxonomy aligned because you will need to have attained that threshold of greenhouse gas emissions. But these are the intermediary thresholds that you can attain by 2025, 2030, 2035, and all that. And so this is why we're developing right now a European regulation that is going to tell companies on how to report against the taxonomy, against the so-called taxonomy thresholds, but also that regulation is going to tell companies how they can report their transition plans to meet the taxonomy threshold. And that's the core issue there. And so we believe it's really important, looking ahead a little bit and to finish with my presentation, that most of the work right now at the EU level has focused on how to define so-called what is green. I never myself use the word green because I believe it doesn't mean anything, it's just a color. But let's say that the EU has tried to define what is the goal we may attain, what is carbon neutrality translated into the taxonomy, into reporting, into benchmarks. But now looking ahead towards that renewed sustainable finance strategy that the EU is going to publish in June. Oops, sorry. We need to also develop what is called transitional finance. Now that we've said what to attain, we need to set how to reach that, how to reach these objectives. And so this is why, again, we want to develop that so-called transitional taxonomy. And so that would be very important, and the taxonomy would be an indisputable tool, for the development of transitional finance, because that would allow us to standardize a little bit business transition plans, to include improvement measures to stay on track with the taxonomy thresholds. That would expand the use of the taxonomy. It's great to stamp already green sustainable finance products, but you need to incentivize everyone, and not just sustainable finance financial actors, to engage in the transition. And so you could attach the taxonomy to so-called sustainability-linked instruments. You could attach the taxonomy to also transition bonds, not just so-called green bonds, but also bonds that are emitted to attain this taxonomy threshold. And you could contribute actually via such taxonomy and such reporting by companies on the contribute to the assessment and management of transition risk. by market participants. Because if you had that decarbonation trajectory and the company is reporting that it's too far away from its decarbonation trajectory, hence it means, to put it very simply, but that it's putting at risk the bank, the investment fund that has this company as a client or that is invested into this company. So at the end of the day, and I go back to the very beginning of my presentation, reporting obviously is core because you need the transparency from the real economy, but you also need that common language. And that's by putting the two together that the financial sector can actually have the right tools to incentivize the way forward in terms of transition from the real economy and to finance the transition via sustainable finance, but not only just regular financial products, instruments, by issuance, by engagement strategy, voting strategy, and all that. I hope that was clear and that it was not too long. And I thank you for hearing me out today. Thank you.
Thank you very much, Charlotte. And we'll give the floor to Emmanuelle about the NFRD.
Thank you very much. While I'm preparing my presentation, Charlotte, I have one question for you, if you allow. You said it's level 2 legislation. When will companies have to report for the first time their taxonomy?
Yeah, so when I'm saying it's level 2 regulation, it means that the actual classification, so the slide I showed you on cement, for instance, all of that will be embedded into EU law in a delegated act, which will be published by the end of the month. Of April, sorry. So, and also the rules of reporting against the taxonomy. So reporting against the taxonomy threshold, so let's say the green thresholds, but also the transition plans, all of these rules will be embedded into EU law via another delegated act, which will be published in June of this year. So this is why I said it is actually done via level 2 law. But companies, to answer your question, are going to have to report, to start reporting against the taxonomy. So report on the alignment of the CapEx, their turnover, their OpEx in 2022 on the 2021 fiscal exercise. Of course, we are asking for a bit of flexibility. We're working right now on that delegated act on reporting. So we're asking for a bit of flexibility given that companies won't have too much time to actually do that. And we've seen that with French companies, for instance. Suez has already started to calculate its, the alignment of its turnover and its CapEx on taxonomy. And of course, it's not easy. It may seem like it, maybe, but it's actually huge work. And it goes beyond reporting, actually. It's not just reporting, it's actually calculating how much of your turnover is associated with that, what is the transition plan you have going on to reach that, what are the processes you have put forward and all that. So it goes beyond reporting. So that's why reporting is actually the end result, let's say, but it's not, it's important, but let's say it's not the only result. And so that's why we're asking for flexibility a little bit for the first exercises of reporting, because we want it to work, we want it to be successful, and we want the taxonomy not to be that sort of like compliance tool, where you check the box. So, but let's say that at least when you follow the EU regulation, companies will have to report starting 2022, if it answers your question. I was a bit long, sorry.
No, thank you very much. So now I will present to you the Nfrd revision. The Nfrd requires, so it's a directive which requires the disclosure of non-financial information that are necessary to measure and monitor the company's performance and their long-term impact on society and the environment. So the Nfrd was first, the directive was first published in 2014. After 2 years of a transposition process into the countries, the first application of Nfrd was for the year ending in 2017 in most countries. In some other countries, it was delayed by 1 year. So in France, for instance, the first Nfrd, or the equivalent in France is a DPEF, Déclaration de Performance Extra-Financière, was published in 2019 on the year ending in 2018. Then last year, the European Commission started the revision of the Nfrd, and we expect in April, or more precisely the 21st of April, so next month, to have the information about the revision of the Nfrd. Then there will be negotiation between the Parliament and the Council, and the final directive will probably be published next year in 2022. So if the process, because it's a level 1 legislation process, if it goes very fast, the first time the Nfrd revised will be published will be in 2023 for the year ending 2022. So the first thing we can say already is that, as Charlotte just said, the taxonomy indicators will probably need to be published before the Nfrd revised is enforced. So the revision will be published next month. So what information do we have about the revision? So first of all, we have some documents from the Commission itself or from the Parliament that will really help and gives us hints about the changes. So the first one is a result of the public consultation from the European Commission that was launched last year. What do we find in as a result of this public consultation on the first Nfrd? The first thing is that there is really a deficiency in terms of comparability, reliability, and reliance. So Nfrd, the objective was disclosure of non-financial information, but in a way it was not sufficiently standardized. So companies are reporting the information, but not in a way where it's easy to compare one company with another one. The other information we get from the consultation is that it's very complex for preparers, so for companies to choose the right referential for reporting. And the public consultation also showed strong support for common standards, for simplified standards for small companies, SMEs, strong support for audit requirements, for digitalization, for disclosing materiality assessment process, strong support also to expand the scope of the Nfrd, and to use the taxonomy that Charlotte just presented to us. And in another document, which is a report on sustainable corporate governance that was presented by the rapporteur Pascal Durand in December 2020, we have the same type of comments on the Nfrd, but we also have two additional recommendations, one on climate, where in this report from the European Parliament, it's recommended to report on the taxonomy, but also on the TCFD, the Task Force on Climate-Related Financial Disclosures. And on SMEs, one recommendation from this report is to identify high-risk sectors. And in those high-risk sectors, SMEs should be included in the scope of the Nfrd. So if we stop here, even if we don't have the list, the details, the complete details of what will be revealed next month by the European Commission, we have already a lot of hints on what is going to change. But what I would like to do in the next few minutes, and it won't take long, I will try to go a little bit into details. And for the next information I give you, it's something that has to be validated, obviously. But before I do so, what we can see from the list is that there is very different levels of information. Some are level 1 information, so will be included in Nfrd, and will need to go through the process of negotiation with the Parliament and the Council. But other we can see are much more detailed, like for instance the disclosure of materiality assessment. And this is the reason why you can hear of two different types of processes. One is the Nfrd revision itself, the one we are talking about. And the other one here in blue is the standard setting preparatory work, or the standard setting process. And standard setting process is in parallel to the Nfrd revision, but it's for more detailed standard information. And this is for this standardization. Last month was published a report from the working group at EFRAG, where Delphine Gibassier was part of, actually. And this document gives a lot of information about the standardization itself. So if we go back to the Nfrd, what we learned from the EFRAG working group is that the standard will be proposed in the Nfrd, but it will be proposed that they will be adopted by the European Commission via delegated acts. So it will be level 2 legislation type information, which allows the Commission to go much faster than if it was level 1. Then there will be a change in scope. And that's where I wanted to give you maybe some more details. Even if all what I put in this slide needs to be confirmed, this is a little bit more concrete than just saying that the scope is going to be extended. So what we hear in the grapevine is that probably all companies, whether they are listed or not, if they have more than 250 employees, more than 40 million net turnover and 20 million balance sheet total, will need to provide an Nfrd, whereas before it was the threshold, for instance, for the employees was only above 500 people. So what we understand is that as of today, 6,000 companies in Europe need to publish non-financial reporting, whereas after the revision, it will be at least 35,000 companies and up to 100,000 if the proposal from the European Parliament that I just talked about, which is to have small companies in high-risk sector to be included. So it could be much larger, but it's still under discussion. Then the double materiality concept will be included probably in the Nfrd, such as the location of the sustainability statement. It will probably be in the management report. Still under discussion is whether it will be in one location or if it could be in several locations in the management report. And clearly there will be a requirement for assurance of the reporting. Assurance meaning that it will need to be certified or looked at by auditors. But although there is discussion on what type of assurance, it's probably limited assurance to start with. Then digital tagging will probably be part of the Nfrd revision, and it's linked to a parallel process, which is the creation of the European Single Access Point, where companies will provide at the same place financial and non-financial information. So here are the expected changes in the Nfrd revision. Maybe I would like to add one more comment here, that's something we haven't talked much or heard much, but very recently there were discussion about the country-by-country reporting from companies called CBCR. Today, this reporting is not public. The company sends this breakdown of profits, revenues, and taxes paid and employees per country directly to tax authorities. And there are discussions to make this CBCR public. So although it's not sure that it will be part of the Nfrd, it's typically some public information, non-financial information that may become public and be part of this either Nfrd or standardization. So that's what can be expected, and it will be interesting next month to compare this list with what will be actually revealed by the European Commission. As we saw before, from the list of things that need to be fixed from the current Nfrd, if it's not in the Nfrd itself, some of the proposal will be included in the standard setting process. So for that, I suggest that you look at the document that was published last month. Without getting into details, what we learned from that presentation is that the first standards, because it will take time to start this standardization process, are expected in 2024 over the, in relation with the reports 2023. So what we can see is that we have the taxonomy first, then the Nfrd revised, and the first standard will be right after the new Nfrd will have to be complied with. But from that time, so from 2024, we can see that every year there will be a set of new standards, and this part of and standardization, because it's level 2, will go very fast starting in 2024. So here it is for the revision of Nfrd, and I'll leave the floor to Delphine.
Thank you very much. We have the time for 1 or 2 questions from the audience to Charlotte and Emmanuelle about what they have presented. You can either put your micro on or put the question in the chat in the next few minutes, and then I'll present the MBA where Charlotte will be teaching. And if there's no question, that means you've been really clear. That's all.
Obviously, we remain available should you have any in the future. I mean, and I know it's Emmanuelle is also fact actually. So
yeah, of course. And if there is any question that comes up in the next few minutes, that's also okay to have them in the chat. So what I'll do is I'll share my screen and just present briefly the MBA. The MBA Leadership Series is really to provide information about the new, going back up, about the knowledge around the themes of measuring different types of capitals that we are all seeing now, and this is happening in our daily life through apps such as Yuka, as well as at the EU level, as well as at the global level, and you see that in many companies. So the MBA Leadership Series embodies the new knowledge that we want to pass on through the MBA, and I'll get through it in a minute. We have 5 key partners for that Executive MBA Chief Value Officer: the ICAEW, the Capitals Coalition, IFACC, NCC, and the Institute of Management Accountants from the US. What did we want to do with that MBA? We have created this as an anchor in tomorrow's world. The program is really building on knowledge that is expected from finance professionals or business leaders for tomorrow. It is really based on strategic thinking. There's lots of technicalities in accounting or measuring the different capitals, but what is most important is what you're going to do with that knowledge. And the MBA is an executive MBA, part-time, and is really about the forward-looking and strategic dimensions rather than the technical. We also are building unique case studies based on business organizations that today have designed their own new accounting systems, or have been strategically using those measurement or numbers to make the right decisions for the future. It's also an MBA where you will learn from the best, and you had a very good example today with the speakers. We have experts from around the world with many, many years of experience in all their different topics, and they have exclusively accepted to become part of the faculty of this MBA. It's also content that you can use immediately. It's an executive MBA part-time, so that every time that you gather the knowledge through the courses, you'll be able to implement a project or a start of a project, or at least talk with your business team and start implementing changes. And of course, you'll benefit from Audencia's network, as well as the network that you will build yourself in the MBA with your cohort, but also with the world-class faculty. And we encourage these groups to really become connected, so that there is some change that comes out of the projects of that MBA. It's an 18-month part-time program which starts in September 2021, all in English, and it's a blended format with pretty much everything online, to the exceptions of the learning expeditions on a few weeks in Paris, such as the first week in September. A little bit about Audencia. Audencia is a business school which is focused on a CSR strategy. It's 120 years old already, with 20,000 alumni, with a presence in Nantes, Paris, as well as in China. And we have a large MBA community with presence as well as in Africa, as well as in Nantes. And the Executive MBA Chief Value Officer is part of that MBA community, which then gathers also a lot of alumni that are specifically did an Executive MBA and a full-time MBA. What do we want to provide you through this Executive MBA? First, to position yourself as a key player in value creation. You'll be able to measure, to communicate the value creation process of your organization. The second is to be able to measure, control, and audit with the right techniques and the reporting and also the internal controls and risks, to be able to understand and anticipate the financial environment and societal implications of your decisions, to become a change navigator. And there's a large part of the MBA dedicated to the international aspects of this specific measurement, as well as the new technologies, including blockchain and artificial intelligence, and how this can be of use today in sustainable finance. The skills that you will learn are both technical, measurement, reporting, and audit, as well as managerial. Through the integrated and systemic vision, you'll acquire the long-term vision, and also tools for responsible leadership and change navigator. There are 4 modules as part of this MBA. One is the sustainability fundamentals, which starts in September. One is the measurement, control, and audit of multi-capital performance, which will be the elements of measurement of social, environmental, climate matters, reporting, communication, and audit. The third is the responsible and transformational leadership. And the last one is the international and contemporary dimension, with the 2 learning trips, one in Costa Rica and one in North America. We have the honor, and we are actually very lucky to be able to partner with Ivy Business School and Inkai Business School. You'll be able to have an immersive program, including company visits, talks with industry leaders, and meeting executives in Toronto, in London, Ontario, and in Costa Rica, where you will be able to meet impact investors from Latin America and the teams that built the first carbon compensation programs many years ago and managed to save the forest in Costa Rica linked to that project. Within the Executive MBA, you have two major projects to undertake. One is a consultancy project, a team project around 12 months, where you have to turn around an SME with the knowledge that you will learn during the MBA and bring all those ideas together into a proposal, a proposition as a consultancy project to that SME to be able to change and transition their business model forward. And the second project is an individual project where you decide which problem you would like to solve for you, for your company, for a startup, for whatever project that you may have, as long as it's a real problem or an opportunity that you have. And you will be accompanied by one of the faculty, whether at Audencia or as part of the faculty of the MBA, through an 18-month project that you will present at the end of the MBA for the degree. We have also we are lucky to have Marvin King, who will be doing the inaugural conference on the 6th of September for the first cohort. Marvin King has many years of experience in governance, in sustainability, as well as in accounting for sustainability. And he was the one to coin the term Chief Value Officer in 2016 in his book with Jill Atkins. And we are very happy that he accepted to launch the MBA with us. Who can do this MBA? This MBA is for CBU managers as well as financial specialists, CSR managers or board members, CFOs. It's an executive MBA, so you would have to have at least 8 years of experience, 5 years of managerial responsibilities. You can have a bachelor degree or equivalent or a full ACA advanced level from our partner, ICAEW. And of course, you need to be fluent English as this program is fully run in English. If you're interested, you can book your personal one-to-one appointment with Christine Guérin, our talent manager. I think she's online. You've got her number, her email, and if you need to reach out to us, you can also follow our LinkedIn page, Audencia Finance for Sustainability. And with that, I think we can close our second MBA Leadership Series. Thank you all for being online today. I don't see that there is any question for Charlotte or Emmanuelle just yet. I would also just like to say that the next MBA Leadership Series will happen in May. It will be about how the banking industry turned to become more climate savvy. And there will also be one in June before we take a break over the summer holiday. So we really look forward to hearing from you, and we wish you a very nice day.